That's the Alexandra Maxi clap, and that means it's Horizon from Skadi. Welcome back, DT, from your break.
Thank you very much. That's very kind of you. Yes, it was a lovely break. Thanks. And you yourself have actually just been away, I think. Is that right? You've seen the sunny climes of Scotland?
North Scotland. 10 days in North Scotland. I haven't been there for 30 years. Well, Scotland. And I certainly haven't been to North Scotland ever. I mean, I've been to the Isle of Skye, but not.
I mean, I've got as far as Edinburgh.
Yeah, no. I went beyond, and I have to say, highly recommended. Really, really fantastic. Can't say too much. I mean, do you know what? We were really lucky with the weather, but there was 1 or 2 days. You can probably hear my voice. I'm a little bit croaky because I probably picked up something a little bit nasty from that kind of colder weather, but generally just amazing. And also, you know what really stuns me is going there this time of year and realising how far north you are, and the sunsets are later. You know, you get these amazing skies.
Any Northern Lights action or not?
I was told, that if I got my camera out, I could take a shot and I'd probably get them. But I had other things on my mind late in the evening involving the bar, I think. So I didn't necessarily do that. But
I mean, from what I hear, like beautiful beaches. I mean, obviously the seas freezing, but I mean, you could be sort of Caribbean type-esque.
Absolutely, I went to a really beautiful beach up the top, white sand, light blue sea. Actually, I thought of you, Alexandra, because as I look behind on the headland beyond, kind of reminded me of Greece with all the kind of rock exposures coming out. And I thought, gosh, I could even be, on the Dodecanese. That's probably completely wrong, but so that was very good. But anyway, Damian, Horizon. So last time we spoke, we were kind of in your wheelhouse when we were talking about funds.
Funds, yeah. This was all sort of brought about by the Pershing Square attempted IPO that actually was then shelved. Although I did read something somewhere this month that it's kind of still a possibility, but we'll see how that develops, because obviously part of the issue has been, I think Matt Levine wrote about again for Bloomberg. The whole point about trying to launch the closed-end fund when there's already a closed-end fund trading at a discount out there. It's quite hard, because why is anyone going to take it at that price when it comes? But anyway,
that's a fundamental thing about any issuance. But actually, issuance is a liquidity event.
Yeah.
And it really is as simple as this. Control functions. There's a little bit of kind of insight from the front line. To get a big deal away in the primary, it's got to be cheaper than what's going on in the secondary. Yeah,
and I think that the bit I read was saying, well, maybe they were going to do it with some warrants, so that you give a kicker to the early investors. And we used to trade warrants back in the day. Obviously, I missed the sort of Jap warrants phase that everyone was very, very excited about, but they definitely exist. Certainly, with my old investment trust hat on, there were quite a lot of warrants kicking around, and I assume that probably was that sort of incentive to get them going. And they were actually obviously great in a way geared plays on these things. If they've been around, they probably have a finite-ish life, 5-ish years. I don't know. I'm trying to remember through the mists of time. But warrants. Yeah, it could be a way that this thing does get off the ground. We'll see.
Yeah. No, that makes a lot of sense. And what generally we kind of come through the summer. We're kind of into the phase of the US election. Yeah, that's gone a little bit quiet, right?
Well, I don't know. There's a debate. First debate is tonight. Yeah, Harris against Trump. So there's a lot of chatter around that. We sort of saw that vol spike in the markets in August, and not the vol stayed elevated. Markets sort of seemed to recover quite well. Vol came off, but actually there's feels like there's a bit more nervousness around. So it'll be interesting to see how we trade into the election from here. I mean, who knows? In fact, a lot of the sort of big high-flying tech names have, not that they crashed or anything, but they come off the boil a bit. I think there's been some rotation. It'll be interesting to see if that carries on through the rest of the year.
We had quite an unwind of the carry trade, haven't we?
Yes, yeah. That was the yen carry trade was we saw that unwind, and there's probably sometimes this is all done in one shot. It kind of feels like there could still be more out there. I think there's a lot of leverage out there in the system that may still have to unwind or could be triggered. It's normally not just an event on its own. They tend to sort of domino through, and actually that may have been a first domino, but who knows? We'll look back in a couple of years and probably it'll all be a lot clearer. But yeah, it's certainly interesting times, and it's not just that sort of one way up to the right market that we've seen for so long.
Yeah, and you always anyway tend to get sell-offs at this time of year as people start to think about capturing gains, year end and so on and so forth. So there's probably going to be a bit of that effect, but I have to say, it kind of feels to me like a lot of that happened or has happened. And maybe the fact that there is a US election that's a bit uncertain has kind of brought maybe some of that forward as well. But anyway, we shall see. But really what we wanted to talk about on Horizon came out of activity that we saw earlier this month around the interdealer broker market. And it just made me think that it was probably time to revisit the IDB market, as it's kind of short for interdealer broker, IDB, terms used interchangeably. And this is, in my view, one of the, remains one of the high risk, interfaces within the financial markets. Interdealer brokers are, effectively one of the main dealing partners with all of the wholesale banks, standing between them, providing liquidity across a whole range of products. And it is a market that has grown really organically over time, spreading its sort of wings into lots of other instruments. I mean, basically anywhere that can support that middle entity, providing, anonymity between dealers, providing that bit of price discovery, has enabled them to kind of spread across the market. But there's no real firm rules around how an IDB operates. It's an etiquette-led, market. And, you and I have used IDBs. I've been an IDB as well as a trader. And I've never seen a set of rules, on either side of the fence. And the closest I kind of have come to it is sort of looking at, the registered IDBs for the gilt market, supporting the gilt edge market makers, because they have this, the carve out to deal with the UK Debt Management Office. But generally, there's no real kind of rule structure out there. Everyone knows how it operates. If you're a trader, you kind of know how your IDB should deal with you, and the IDB knows the kind of the rules. And it's a very individualistic relationship. And that also kind of grows up into the way that the coverage works. It's got very personal. We're talking about voice broking now. The IDBs have been fantastic at innovating in the electronic market, any which way they can to generate liquidity and commission. They've done that and done that very successfully. But there's still a lot of voice broking which goes on. And that's really, I think the focus of our discussion today, because it's that the fact that it's grown out of etiquette, that there aren't really any controls around that market. And there are some controls that could be put in place, to protect people, protect the firm, protect individuals. So that's sort of the reason behind that. There was an instant, which we've written about, has prompted us to write a few articles about interdealer broking this month, which you can find on my profile on LinkedIn or on the Skadi page as well, talking about IDBs. But it really came out of a situation where there is a case occurring in the States between, which looks at an IDB, her manager, traders at a bank, and the pressure that she was put under to effectively, in inverted commas, I think as the press have covered it, play the game in order to get business back into the firm. And I think it's worthwhile going through and understanding what IDBs do, how they operate, and therefore how it comes about that this is a place where it is a high-risk frontier, definitely from a conduct and culture point of view. If you're in audit, compliance, if you're in surveillance, what you should be, the areas you should be looking at for interdealer brokers versus, your traders, and how how they are operating with each other.
Yeah, I'm looking forward to this one because certainly it's not really something I use much. I'm mostly from an equities type background. I did use them a long time ago, actually, when I was working with you round at Barings. We would use them on the investment trust book just as a source of liquidity, as you said. You'd speak to them, you'd put up a price, a level where you think you would, happily deal. But obviously, you were also up on the screen at the LSE at the time. So I suppose you'll be better to explain why you would use them. You probably come over it more with a convertible bond hat on, which is you're always looking for liquidity. They're generally a lot of them are quite illiquid names. So I could completely see why you might use them. I mean, what would be the mechanics of you using an IDB?
Well, yeah, you're absolutely right, and you, as you say, you come from an equities background. That's your strong suit, and obviously the trust. And we did use it in the trust, didn't we? Because that was kind of less liquid. And funnily enough, we chose as a great kind of case study for, culture, conduct, the Taylor Woodrow a case study, which is a fantastic case study. If you haven't listened to that, again, find my piece on LinkedIn that we've written up about it. But we'll also, if you're in the Discord, you join the Skadi chat community. We've got all the links to these things in the Discord as well, so people can see all this stuff. But as you say, generally it's away from equity. So if you look back at the history, it really by 1999, and you and I were dealing before the millennium with IDBs, but really the growth in what IDBs were starting to trade, and we saw, we had them trading in the convertible bond market, in the warrants, Japanese warrants. They're involved in that. They started to come into the funds market, but I remember it was really a forced entrance.
Yeah,
they weren't part of the furniture, far from it. They established themselves within that marketplace, and there was a lot of resistance to that. But effectively, this growth in the services being offered meant that by 1999 there was a consultation conducted by the London Stock Exchange and the Debt Management Office as to what were the kind of interdealer services people should want. And it's a pretty short study. It's a little questionnaire, but it's actually quite eye-opening because it says as much in 1999, I think, about attitudes and fears around interdealer brokers and their activity as it would today in 2024. I don't think anything has particularly changed. And one of the things that came out of that study was, who can interdealer brokers deal with? And the market was split. The market was split between people saying, well, I don't really care who they deal with because they're going to bring me more liquidity. Yeah. And then there was the other half of the market going, well, hang on a minute. I don't necessarily want to be making prices to customers who are also probably dealing through the interdealer broker with me. That doesn't work for me. And I think that's still an area of sensitivity. Effectively, I think the upshot of the consultation was it was up to the interdealer brokers who they dealt with. It was their own commercial decision, their own commercial choice. But we'll certainly see that actually is a choice that has real impact and ramifications on what people do. So by the time of the global financial crisis, you really had I think the one fundamental significant change in the dealing relationship between interdealer brokers and traders. So before the financial crisis, and I mean going back to before the Lehman event, well before that, we're talking about when liquidity came out of the system. You and I as traders would have come in every morning and probably given out 5 or 6, 3 or 4, 10 or 12, I don't know what the number would be, but prices that worked with the interdealer broker.
Yeah.
And that was because we had capital, we could take positions, there was a lot of freedom around what we did, and we did that to really get as part of the service. We wanted to receive a service, and it was part of the quid pro quo. Well, by the time that in the aftermath of the global financial crisis, that ability to put up capital was really gone, and the appetite was gone as well. And so you had a situation where now the banks weren't really inputting prices, or traders from banks weren't really inputting prices, but leaning ever more heavily on what the interdealer brokers could provide in terms of pricing.
Yeah.
And going back to this point of who could you deal with, I remember that so one of the things that we've talked about for interdealer brokers, one of their benefits is their ability to facilitate anonymity in the market. You don't know who you're dealing with. Well, one of the kind of upshots of the financial crisis and people moving from the wholesale banks into the interdealer broker market, because there was a lot of people made redundant. Yeah. There were people coming in. There was also an attitude that maybe the world has changed. Maybe things are going to be much more agency. So why would you sit in a bank? Why don't you put those relationships to work within an interdealer broker? You had this phenomenon grow up where instead of being, matched or dealing as principal, you had name give up, where you deal with the interdealer broker, but they would tell you who was dealing against you. Yeah. And this was also something that had to come out of certain markets where actually the interdealer broker couldn't sit as an intermediary in terms of booking, but would still want commission. So you'd have a name give up market. You'd tell the other side who the counterparty was going to be. They would book against that counterparty, and then you'd submit an invoice effectively at the end of the month for these are the transactions we've done, and this is the money we'd like to be paid, please. Yeah. Based on our agreed commission rates. But that was a real kind of change in terms of, that real capital reduction. And this then meant that if you were sitting in an interdealer broker having no prices come to you, then there's a real temptation to try and get the market going. Yeah. And to try and put up prices to start something. And that's obviously misleading behavior. And it's got a name. It's flying prices. So flying prices, and that's illegal activity where you create the impression of a market where none exists. And that can be putting up prices. It can be telling people that something is traded when it hasn't traded, or there's no evidence that it's traded. And those kind of things, those kind of activities are designed to get people to react. Yeah. Because even if you get a reaction, it informs you. The fact that a half bid trades down and there's a kind of collective sigh from the market, you can tell everyone's long. And then you can think, well, gosh, I think we ought to be a half offered. Yeah. And, there is information that you can utilize, based on what you know of people's position. So it's a big position of responsibility there. The next sort of, big thing is really the change in, the UK Bribery Act and attitudes to entertainment. Because I think if you ask anyone about interdealer broking, they'll say, oh, yeah, entertainment, and that is, how do they establish these relationships between traders and themselves? And there always was a big entertainment market, whether it's just a few drinks after work, or it's dinner, or it's bigger events. And that, I think, became harder post 2010. However, when you kind of fast forward to sort of 2012, and you have the tapes, being made public to the market during the LIBOR scandal, just knocking the table there, as I'm getting more animated about things. That one of the things that came out of the tapes, and I always say this when we're doing investigations at Skadi and we're looking at search terms. One of the great search terms for bad behaviour during LIBOR was steak. I'll buy you a steak. Because that seemed to be the kind of the buzzword, or certainly the key motivator to get any trader at an opposing house to do something, or certainly get an IDB to do something for somebody. was the kind of the carrot of a steak. I'll buy you a steak. And you can see that in the kind of the libel take. So still, very much that kind of, going out activity and entertaining still going on, and part of things. And then, and that also showed you kind of how instrumental the IDB is, because, you had a lot of focus, or you have a lot of focus on chat rooms and, bipartisan and multi-party chat rooms, and how those can't exist outside of the firm. You don't want traders from JP Morgan and Citi and SocGen sitting together on a chat room discussing where the market should be or could be, or what orders they have together. Of course, that that doesn't work. But you do have this conduit, potentially, if misused, between all these dealers, and also, these are relationships that build up over a long period of time. People are friends, and they know a lot about each other. And that's again, that sort of that personal contact brings up another kind of high risk area, which came about really a couple of years later, when as a result of all of the bad behavior out of the financial crisis and the too much risk taking and so on, there was a real kind of attitude that we've got to make a change in compensation. So if you're sitting inside a bank, you found that, okay, great, your salary's been increased, but you're now undergoing a bonus cap. And also, by the way, your compensation is getting pushed out now many years, and it can be clawed back. If we find that you've done something wrong, we're going to claw it back. And set against that, you've got people in the interdealer broker world that are paid on,
on a formula.
On a formula. Hard payout, but also they draw down. They don't get paid a salary. They draw down from future bonuses their draw, which is effectively the salary. So you're on risk as a broker. You've got to cover that cost. Otherwise, they have what's known as lemon clauses, where that amount of draw can be reduced. So that effectively over time you can be working for nothing. If you can't keep meeting, your obligations to cover costs, which is hard, but it's the way the market works. So if you have those two people juxtaposed against each other, where you have people who have their compensation pushed further and further out at risk of being clawed back, and you've got someone that's very, very motivated to cover their cost, but also can be paid out on a quarterly basis, a hard share of any revenue they make, then bringing those two together, that's an area of risk, right? An area of conduct risk. Because you can see that in, excess brokerage paid to one interdealer broker or preferred interdealer broker. And if you're doing your sample testing and surveillance, you can always see that, this person is trading, every time paying commission. Really? But they're never putting up prices. They're only being an aggressor. Because in the interdealer broker market, what it tends to happen is that if you are someone who contributes prices and then someone deals against you, they're the people that are paying the commission. And that's to incentivize people to put prices in. Because if you put prices in, then you don't pay the commission. That's the idea. That would be kind of how you you see that activity. So that's sort of a gallop around, kind of where the market is and where it's got to. In terms of how the market has sort of come about, there's a real etiquette to dealing. So, and everyone understands this, but it is etiquette. That's the point. So you put up a price, you give me a bid, I'll go away and find an offer. I'll show you that offer, and I want you to repeat your bid. You should repeat your bid unless you've withdrawn it. And of course, if you're sitting there as a trader, you don't see the other person repeating that bid. You're waiting for the interdealer broker to repeat to you. And so this is one of the things out of flying prices, that if the broker is putting up a price to you and you think, well, yeah, I'll react to that bid. I'll show you an offer, because you're waiting for that repeat to know it's firm to then slam it. So of course, an interdealer broker is sitting there thinking, oh, crikey, we put up this bid, but what I was hoping was someone might bid ahead of me. Or do you know what? Okay, we've got this offer. Quick, run round an offer to everyone lower than where we are, just to try and snaffle out some kind of bias so we know what is our downside on this. If we do have to take this paper, are we in trouble, or are we going to be able to cut this at least for very, very limited brokerage? So that's the kind of, the etiquette that goes on. And in some instruments, it's all very straightforward. If you think about the bond market, there's not much movement around prices. You put up your price, it's there. There may be a bit of time decay, but essentially until you've kind of cancelled your price, it's in there. Yeah. But then you've got other markets like options markets or convertible bond markets.
The underlying is moving.
The underlying is moving, and you can be dealing on a hedged basis. So you've got people who are trading outright. You have people trading on swap, so that's where they're hedged. And again, on the swap basis, everyone has a model, but they've all got different models. But they can't necessarily agree on what the delta is that you're hedging with. It will largely be the same.
Yeah.
But there is scope for a little bit of, if suddenly the stock moves a lot, I'm going to completely change my delta to make it absolutely no incentivization for you to deal with me. Now, all of this kind of stuff starts to give the trader the impression that the interdealer broker is up to no good, right? If people are being flaky on the other side, or indeed if they are not necessarily behaving the way they should. The other thing too is that if I show you an offer and you're repeating a bid, I'm expecting you not to show that to anyone else in the marketplace, right? I want you to repeat to me, and then I will give you permission. And it's really permission. It's a real kind of master-servant kind of thing. I'll give you permission to go and work it. Yeah. I'll tell you, work it round. Or, do you know what, I don't want to work it. It's fine. Or I'm going to hit you, that kind of thing. So if you're then trying to trade down and you're trying to trade some size, and then you've got other people around that weren't party to the trade that the broker's trying to get in on the print to protect them, because they're saying, look, if this goes down, I need to buy some. I'm short. If you do get some going down, that kind of thing. So you're the person who's put up the bid in the first place, and you're not getting filled enough. That kind of thing can upset you. And in all of this, of course, it's all happening behind closed doors on an anonymous basis. You don't know what's happening. There's so much kind of smoke and mirrors and interpretation of what you're hearing and seeing in the market. Because as you're trading with an interdealer broker, there's another 4 possibly interdealer brokers who don't have the business, that are trying to win the business, that may also be on the hoot to someone else on a desk where you're trading down at a bank, and they hear it. And then they'll start posting the trade to try and catch all of this activity. Yeah. So all of this serves to generate this kind of ill-feeling mistrust between an interdealer broker and the trader. And I think the other area is on no-post trading. So this is where, if you're an interdealer broker, what you want to do is when you've traded, you want to broadcast it to the market to generate that follow-on liquidity for your account so that they can get more transactions done, or you can get more paper traded, whatever it happens to be. It's more commission to you at the end of the day, but you're providing that liquidity. Now, there will be circumstances where traders won't want the market to know that they are trading. Particularly if there's a very difficult customer order going around and they feel sure that it's not necessarily being only worked at their place, for example. You might say, I'd like to buy this, but it's strictly on a no post. You do not post that to anyone else. And of course, then you have situations where someone's left an offer, you're the bid, it's repeated to you, you come to try and lift it, it's already traded on a no post, sorry.
Right, so that's your get out clause.
That's your get out clause. Right. And it's like, whoa, hang on a minute, how does that work? How does that work for me? I gave you the bid.
Yeah.
So there's all of this stuff. And the policing mechanism is a very straightforward one of voting with your feet. I'll take my business away from you.
So yeah, you talked about this in the LinkedIn article. There's a pulling your line, pulling
the line. I'm going to pull the line. All right, the line's out. I'm not dealing with you anymore. Might be for the day, might be for the week. Depends on what it is, but it's completely arbitrary. And really, it's down to the individual, because the trader's just deciding, right, that's it. And they may not even say that's it. Your line's out. They may just
go quiet.
They might just ghost you. They might just switch the box off.
Wow.
But that's very difficult because, from the point of view of the interdealer broker, who is paid off of directly off that revenue, that's really impactful, very painful. So of course you then got to ask yourself the question: what would they do to get the line put back in? And then this goes very much to this particular case, and it's really the things that can go wrong in the interdealer broker market, and this power dynamic that leaves open the scope for predatory behavior and coercion.
Yeah.
Right? And these are terrible words from a conduct perspective. And really there's a very simple control that could be put in place to protect everyone around this, which is that you take away that arbitrary decision from the trader, or you put in place a process whereby the trader has to apply for the ability to withdraw the line. And this doesn't really actually have to happen between an interdealer broker and a trader. I could see this happening, for example, between a dealing desk at a fund management house and a sales trader at a bank, right? It's the same kind of dynamic. Exactly. These relationships happen, and that pressure, of withdrawing business is there. But I think it's just very stark in the wholesale world because of this hard payout that the interdealer brokers are under. And it is, if the allegations are proved to be correct in this particular case, then the allegation is there that her supervisor was saying to her, after all of this kind of, she was effectively being coerced by the traders, who then withdrew the line when she didn't want to accept them back at her hotel room. And really, you have to read the articles to see the allegations of the behaviour. But it's the supervisor at the interdealer broker that has allegedly said to her, come on, you need to do this for the desk. We've got a lot of people relying on this here. There's a whole team. It let down the team here. That's a lot of pressure around that. So, taking that decision away from the trader, or certainly putting it into a place where it's got some transparency or some scrutiny, from another function. Whether I would think you'd need to run it through your desk head anyway.
Yeah.
But beyond the desk head, because again, it sounds from the article that the desk head at the bank was kind of implicated in the behaviour as well. Although that could be, some license from the lawyers, I guess, kind of writing a really good aggressive case. I don't know. Mm-hmm. We've not investigated it. Skadi hasn't been asked to investigate this one, but we have looked at similar situations. But excuse me. Certainly to be run by some kind of, compliance function to say, look, these are our reasons. This is why we're doing it. We're documenting it. And actually communicating it to the other firm's compliance as well, so that they are aware. And also, what are the agreed steps to be taken? Because then they can also investigate it on their side and say, look, we're alleging that, there were split prints, or we believe they have dealt with one of our customers, not another wholesale dealer. Yeah. And then the compliance can look and go, well, actually, no, that's really genuinely not the case. Or actually, do you know what? You're completely correct. This person is flying a price, and that goes against our processes and so on. Because there's actually no incentive for an interdealer broker, the individual who's had the line pulled, to say anything about it. Because you're immediately shining the spotlight on yourself. in terms of your performance within the firm. You certainly don't want the other clients that you cover to know that this has happened, because you don't want that
liquidity, possible liquidity.
Well, also people, exactly, feeling that you're running, not on full tank of gas. Also, maybe they might do the same thing. They might be tempted to kind of repeat the activity. So you're going to keep it all very, very quiet. And again, that's great for predatory behaviour, where you have a victim, and this is a victim situation, I would say, where they're going to stay quiet about something, and that really enables that kind of behaviour to occur. So that's sort of the kind of the gallop through this. I mean, there's other areas I think as well where it's worth looking at the relationship between interdealer brokers and traders. One of them that we've talked about is obviously the compensation risk, but you can kind of see that with surveillance. The other one, which again I think is not very well understood, is the risks around grey market trading. So when a new issue comes to market, it is then traded in the pre-market before the terms are set, and that's a market that's really generated through the interdealer brokers.
So just to actually, before we carry on this, just to take a quick step back.
Yeah.
Obviously, transparency, what is an issue, is part of this, or lack of transparency. I mean, are these things recorded somewhere, apart from the fact that it's on a recorded line, the fact that you were X bid and then that wasn't there and then you were there, and et cetera, et cetera. If someone has to go back and look to reconstruct what has gone on, for instance, as you were saying, a line has been pulled and you're trying to justify it, and you're going, this happened or this didn't happen. Is there a way that these things are recorded as they, obviously, I come from a sort of trading where, once a trade occurs, it prints on the tape. In equities, you've got brilliant transparency. How would that work if someone was looking to go back and reconstruct?
It's very hard because actually in a lot of these markets things don't print, right? So you can't see anything on a tape, right? So that's difficult. If you're the control function inside the broker, one of the benefits of moving, or the transition away from the hoot and holler way of dealing, where everyone's shouting down a hoot saying that they're par bid or whatever, and the growth of the Bloomberg chat room, the instant chat, IB chat room, is that actually everything's there.
Yeah.
You can see it, and you can see that your brokers broadcast to the market that they were now going a par bid, and look, lo and behold, there's the quarter offer from P1 or whatever account it happens to be. So you can see that. Now, obviously, if that's broadcast, through a voice channel, but those voice channels are becoming less and less because everything in a broker is cost. It comes out of your bottom line.
Yeah.
So actually, putting in a phone line to XYZ bank, that costs you. You don't want to do that if you can, and you'd much rather have it on the chat. And actually, the traders would rather have it on the chat because they'd like to be able to scroll back through and say, "Oh well, hang on a minute. I thought at 10:30 you said you had a par bid. What happened to that?"
Yeah.
So it works from that perspective. One of the things out of this case is it's alleged that there were off-channel communications, and that's obviously been a thing for the whole market.
Yeah.
And it is a risk. When I think back to not so much in London where I was trading, but much more out in Asia, because it's a smaller market, it's much closer, and you're all kind of expats together. Then, and I say expats, of course there were local people dealing as well, but it felt very expat-y.
Yeah.
Then really you did become friends with people, and you were seeing them in the evening, in the weekends. You were going out on excursions together. Your kids were playing together at the residence club or whatever. Yeah. Then you're going to have these off-channel interactions and communications. And then, of course, there'll be a deviation, a slide into, oh, well, while we're on it, do you still have that buyer of those? Because I think I could probably get those on if you did. And that's, you've got to get that onto a proper communication channel so that it's documented and so that you're protected. But you're right. If things are being made up, then they're not going to be on any channel, are they?
Yeah. Sorry to interrupt, but But yeah, obviously you were coming on to grey markets, and I suppose the part of the issue with that is that entity, with that stock, whatever it would be, bond, doesn't actually exist. So it's not like there is, you could track back against an ISIN, a ticker, or whatever it was. It has. You're trading before it has come into being.
Yeah, you're trading before the terms are fixed.
Yeah.
So if you think that it is a mechanism for the convertible bond market, for example, it is a pre-IPO mechanism too.
Yeah.
But in that respect, I think it's cleaner because you kind of know that a share is going to be a share.
Yeah.
And that's no one's going to change the par value of a share or whatever it happens to be. But with a convertible bond, there will be a change in the conversion property depending on what premium these things come on. And also there'll be a change in the coupon, depending on what yield these things come on. And so those terms aren't set until the bond is fixed. And you have all of this potential for dealing in the grey before the terms are fixed.
And also, I suppose there's a problem that you could make it appear that a deal is going better than it possibly is by sort of, not moving up the price, but just showing there's activity going on in the grey.
That's absolutely the risk around a new deal, because if you are the lead manager, so tempting to make this deal go well, because there are a certain amount of people, and these things come as an accelerated book build. So you have the people that will read the page term sheet and understand it and be able to price it and go, well, this looks like value. Mm-hmm. And then you have a whole load of people who really don't care.
Yeah.
They just know that this thing is trading above issue price.
So they can flip it.
And they can flip it. And if they can get hold of an allocation and maybe they can sell a little bit and they'll risk selling a little bit. But also, if they see this thing trading above par, then they'll be into the book like crazy.
Yeah.
And suddenly the book is absolutely getting full. It's oversubscribed. Job done. The other thing you can do as a lead manager, because if that is happening, if you've got a deal like that that's starting to trade up as aggressively like that, then you've got the issuer on the phone going, well, what's going on? You've mispriced my deal. You could have got much better terms for me. Even if this price is at the expensive end, these things are trading at +6. That's crazy. That's unacceptable to me. So again, for the lead to offer into the grey market could bring the market down, and there's no audit trail of this happening, because where is the audit trail to say that the day before yesterday, if the deal's open more than a day, which is unusual, that I as the lead happen to trade these back then. I shouldn't be trading the grey. I'm not allowed to.
Yeah.
But actually, you can't see, because also the first settlement date on a bond transaction is usually long. It's usually more than the T+3 usual settlement. So there's a bit of scope for you to actually sit there and not book something. As long as you've got it in the books by the settlement date and everything's matched and everything's settled, that's fine. And you can't see it from a surveillance point of view, what's been happening. And from the IDB's point of view, what's commission?
Yeah.
That's hard revenue to me. Not necessarily motivated to call that out, because that's just covered my costs for the month. So that is a risk area that people should be cognizant of. I think anyway people should be cognizant of it, because the potential for there to be reasonable volume in a grey market at times. Sometimes it comes and there's absolutely no transactions whatsoever, but sometimes it can really get quite interesting. I remember we were doing Malaysian transactions that were Islamic compliant, and these were very attractive because they were backed by Khazanah, and the market was very, very excited by this, and that meant that there was a hell of a lot of pre-market transacting in the grey before the transaction even came. And making sure that you have everything reconciled in your risk systems and so on is one thing, but then also working out what's been happening with the interdealer brokers is completely another. So, I mean, that's a real gallop through interdealer broking, and really just a call for one simple control. Have a look at that process of how your traders are making a determination to withdraw business, are you even aware that they've withdrawn business? Have they informed anybody? Is there any way of knowing that they've informed it? Because the ramifications on the other side for bad culture, bad conduct, are quite high. And again, without a real understanding of what can happen in an interdealer broker market, what should happen, what are the expectations of the front office, of the traders from their interdealer brokers, then, it's very hard for surveillance, compliance, anyone to actually monitor and control what's happening on these desks.
Brilliant, Nick. That was certainly a lot of stuff I didn't know about the market, so thank you very much.
Real gallop through. As we said, this is Horizon. We'll be back with some of our normal inter-Horizon episodes as well. We've got a few goodies coming up for you as well in the next month, which I know Alexandra is working hard on organising and setting up. If you've found the subject matter interesting, we'll put links to the articles about interdealer broking and things like the LSE DMO consultation on the Discord, the Skadi Discord. That is the chat community where you can come and be a friend of the show and get involved with other people who are in the tribe.
Mm-hmm.
Great stuff, Damian. So until next time.
Thank you very much, Nick. Yeah.
Speak to you soon.
Cheers.